Okay, so we're on. Hey, good morning.
Good morning.
Everybody full of food from last night and whatever booze you were into? I'm just kidding, of course. Wake up. It's the beginning of the day. Brian is in the back. If you're not enthusiastic, he will beat you into enthusiasm. Guys. So this is the vague panel funding. I'm assuming you're all here because you want Larry's money.
Yes.
There's one. So
Might as well tell the truth.
that's exactly right. Before we get going, just give us a show of hands of the mix of the room so we can try to be of maximum service to you as opposed to just blathering on about stuff. How many entrepreneurs in the room looking for money? Okay. How many, let's see, what else is there? That looks like most of the room. How many venture guys looking for deals? Oh, venture guys looking for deals. Okay, the guy in the back, you got to get him on your list. Okay. And what else have I missed? How many artists who are looking for money? Okay. So that's pretty much it. So we have a room full of entrepreneurs looking for money. So.
That's a weird dynamic.
So what I'm going to do is you guys can read. Obviously, you've read the bios. I'm just going to give each of these folks 1 minute to tell them who you are, who they are, and we'll sort of jump into some. I'll get the conversation going, but this is an interactive panel. If you've got questions, want to call bullshit, any of that, just raise your hand or jump in. So let's go to the other end of the table to Carter.
I'm Carter Laren. I guess I'm the one on the panel who's on both sides of this. I do some angel investing, but I'm not looking for deals right now. And I also am running a startup called Mox, which is, to give it a quick pitch here, is basically what MTV would look like if it launched in 2013. A lot of people say that, but we're actually a television network online with music videos, news, artist interviews, all that kind of thing. So that'll be launching in about a month at WMC. And the angel investing side, I'm the non-expert on the panel in terms of capital. I mostly get involved in stuff that I find exciting and founders that I think are interesting, and kind of get involved at all levels. Usually I can't help myself and end up rolling my sleeves up and doing a lot more work than probably most angels do, which is why I'm trying to limit what I'm doing right now, because I've got my own thing going on. So I guess that's the summary.
Hi, Christine Herron, work at Intel Capital, and I'm probably here because I invest in companies that are relevant. So Common Sense Media, which is actually something I did at Omidyar Network, which I'm very excited. They go into evaluating content for children and what's the applicability of that. A couple of my current investments right now are Jelly, which does a streaming media content service over broadcast radio, terrestrial radio. That's both crowdsourced from the app or through the web. They've also got that for advertising, so advertising is also real-time with feedback. They're getting up to about a couple hundred stations in that network. And then a company called Store Envy, which is a social commerce site. They have a marketplace, which very soon will also be supporting digital downloads, so it'll be a great way for artists to sell music directly.
Hi, Larry Marcus, Walden Venture Capital. I do sprout stage investing, so it's post-product. In terms of how to best get in front of me, I really love seeing the product. Seeing the demo is really sort of helps me really understand what you're doing very rapidly, very clearly. In terms of the companies, I'm involved with Pandora, SoundHound, Bandpage, Boombotics, Lyric Find, and Swarm FM, among others.
So I'm Rachel Profit. I'm the lawyer on the panel. One too many, probably. So I spend days, nights, weekends representing startups, helping entrepreneurs figure out which end is up, from sort of all the things of incorporation to figuring out when and how to go about approaching folks like these on the panel, and sort of everything in between.
I'm Mike LaSalle. I'm with Shamrock Capital Advisors. We're a little different from your traditional VC. We're a private equity firm that focuses solely on media, entertainment, communications. So about half our deals are traditional leverage buyouts, control type deals, and the other half are growth equity deals. So when the company has real revenue, on their way to being cash flow positive. Some relevant, we're constantly looking at deals within the music space, including buying old libraries and publishing assets or masters, to one of our current portfolio companies is Isolation Network, which is the parent to Ingers Fontana, which is the distributor of all Universal Music's business repertoire online and digitally in North America, and also for a lot of independent artists and independent labels.
And Mark Montgomery, I'm mostly your moderator. I will jump in occasionally. I'm also a little bit both. I do angel investing, not looking for deals, thank you. And am an entrepreneur and currently experimenting with the idea of rather than planting seeds in a field, laying eggs and sitting on them. So less deals with more control. Let's start with, I think, really the question that a lot of people in this room want to know, which is, obviously, how do we get an appointment with Larry? But what do you guys look for? So I think all of us sitting up here have a set of characteristics that we're looking for in an entrepreneur. So why don't we start with the ladies and chat about what are those sort of 2 or 3 or 4 things that you're looking for when you're engaged in an early conversation, whether that's to invest or to sort of farm club somebody.
So having come from, my last firm I was with was First Round Capital, which does exclusively seed stage investing. So I have a bit of a product bent on that, which is I'm looking for a good team, good product, and a good market, and some idea of how you'll do that customer acquisition. It'd be great to have all the things that you also want to see in a business, but realistically at the early stage, I just want a good product, good team, and some idea of how you'll get some customer acquisition. And from there, if you can take off, well, then you get your next round of funding and you're off to the races.
So I'm not dissimilar. So when I'm sitting down meeting with a founding team, I absolutely want to know that there's people who are passionate about what they're doing, because so I work at Wilson Sonsini. We represent companies from the guys with the business plan all the way up to the Googles and Yahoos of the world, hoping to start with you day one and grow to the end. I think that sort of that passion about what you're doing and actually a roadmap on how you're going to get there, sort of the best ideas are not always going to materialize unless there's a plan. And so I'm looking at team and kind of the vision for the market and execution strategy.
Mike?
Yeah, I mean, once they've gotten to that point where there's passion, where there's vision and all that stuff, for us, we're looking for real traction and real growth in the business. And so you've executed on your plan that you've told these guys that you were going to go get, and now you need that extra step to go push it over the hump. And you're addressing it from the point of view of, here are the trends we were trying to take advantage of, and here's the unit economics that we're actually seeing in the business that makes sense. I think one of the things that a lot of people don't realize is when you actually look at the unit economics of whatever they're selling or whatever they're doing, and you pencil it out in the simplest terms, they actually don't pencil out. So you have to actually have a model that works and scales.
So I really like to see a very breakthrough technology or product, and I want it to be done. So it's really not about the concepts. I want to actually physically see it working, and that's why the demo is so important, because I'm not going to be able to build your technology. I'm not a technologist per se, but when I see something that really creates that user joy, that delightful experience, in whatever the target market is, that really speaks a lot to me. That's really the starting point, and then after that, it's important to realize that I don't do a lot of deals. I mean, it's literally, a couple of deals a year. So it really takes some time to hear what it is that you're doing, understand what your plan is, what your vision is. And, another key factor is, how much progress have you really made? How efficient have you been? I really believe in sort of a smaller, more lean model. And if you've been able to make a lot of progress in small amounts of money, that's really important. If you've burned a ton of money and it's starting to look like, gee, convince me why it is that suddenly you're going to become efficient and make a lot of progress, it's just a much tougher sell. So that that efficiency and clarity is really is really important. And if it seems confusing, if it seems like, the product isn't quite working, if it seems strange, it really is strange. And I'll show products to just people around my office and get their feedback, because if they can't like it and it's in the consumer space, that's probably not a good sign. If they're anywhere near the target market.
I mean, I'm not dissimilar from, I think, the other comments, but I get excited about ideas that are not just sort of little better than something else that's been out there, or something that's, I think there's a lot of, I'm on an angel list and I see a lot of startups that are like, wow, that would be a cool feature if Twitter did it. But that's not a product. And you can hit big with those if you get lucky and the right person buys you or whatever, but to me that's too risky and not exciting enough. I want something about which I can really be passionate, and that stuff that tends to be revolutionary in some way, or something that at least I think is revolutionary and new. And the other thing is market size matters to me a lot. I think there's a lot of people solving really interesting problems in really clever ways, and the market size is yeah, $10 million. Okay, well,
10 people.
great. Like, I'm glad you can do that, and the 5 people in the world that you are doing that for will love you, but that's not a business. And
Not a business that we would.
not a business I want to run. Yeah.
Not all
Start
business.
with something that makes a big cash.
Sure, but I'm less interested. And so I think, and I think a lot of people, a lot of founders that I see get caught up in solving a problem that is really important to them without being able to look outside themselves and realize everyone is not like me. Especially in the music industry, like everyone I talk to is a music nerd, and all they focus on is like, I need to be able to get more deeper data about this and that. And it's like, you know what? 2% of music lovers read like blogs. You're not normal. So you're not like, so I mean, those are the things that I look for. And the last thing, which I think I've made errors before on all these fronts in investing, but and the last thing is really founders. The team is important to me. The founder in particular is really important to me. I do want someone who's really passionate, but I don't want someone who's irrationally passionate. I want someone who can demonstrate that they will be able to change. You hated the word pivot before, we had a conversation about that, but without using that word, they will be able to adapt, because things are going to go wrong. It's never going to work the way that you said it's going to work, and if you are going to just double down on your bad bet from day one, that's not a good sign. I'd rather have someone realize like, oh, we're doing this and it's not working. I need to change what I'm doing, and someone who's constantly looking outside of themselves and aware of that. And that usually takes a founder who, in my opinion, can wear a lot of hats. I also kind of don't like founders who say, well, I do this thing, and I need to hire someone to do all these other things. Yeah, you do need to hire those people eventually, but you should also be able to do them at some level yourself. Because especially early on, you can't just go hiring experts in every field in the world. It doesn't work well for my pocketbook.
Jump in. You had something there.
Oh, no, I was just responding to one of the things he was talking when you were talking about music nerds. And so I think one of the, I don't know, maybe everyone on this is a music nerd except for me. I'm not sure.
Larry has a small yellow speaker.
Yeah, I mean, so I'm absolutely not even close to a music nerd. I am the 99% on music, for sure. So, and so the 99%, I get in my car, I listen to the radio. Every time I'm in my car, if they're talking, I switch it to music. If I don't like the song that's playing, I hit scan, or I flip through my stations. I think I buy music online at some irregular level. It's not really that often. I still rip CDs because I like to have it. I like to have it. I'm a hoarder. So I am 99% in many ways, at least for my generation, so I'll take that part.
So just real quick, for me, it's always a bet on the jockey first. It's always the founder for me. You can smell unstoppable on people, and then second, it's the idea, right? And there's a lot underneath that. But for me, it's always a bet on the person and the team first.
Mark, I think you just had a great idea for a new scent. Unstoppable.
Who can we pair that with, Larry? So let's talk a little bit more about, because I heard the team a lot. So when you're looking, and I know this sounds like just a stupid statement, but I'm amazed at how many technical companies show up without a technical co-founder to pitch for money. You want to talk about what the mix of an early team is? So at a sprout stage, you assume they've got pretty substantial headcount, or not substantial, but
I mean, by definition, they figured out how to build the product.
Yeah, right.
And I'm just, I'm trying to remove a whole bunch of that technical risk.
Yeah.
Because there's a ton of great ideas, but it's really executing it in that simple, joyful manner that takes so much. So I'd say, and look, not everything is about mind-melting technology. Sometimes it's about a mind-melting process, or making a system that's been very complicated very simple. But technology, matters a lot. And if you don't have a great, really wonderful, technically evolved person involved with your business, you definitely need one, pretty rapidly.
anyone else want to add on that? That's pretty clear, I think.
I'm just happy to see my advice isn't wrong when I see founding teams that come in without the technical guy. I say, well, that's great, you can kind of iterate a little bit on this, but you're going to need to go find someone who can go into these pitches with you and convince folks that you're viable. No.
And just taking a little bit of a later stage view, it is very important to have that technology person, but I want to put one adjective in front of it: a practical technology person. Because there are absolute rock star rocket scientists out there, and we see them, and it's like they are on Mars, and they may be right about where it's going to be in the year 2070, but I need to exit by 2020, right? I need to be out 50 years earlier than that. And so it has to be very capable, but very practical or pragmatic, whatever you want to say. But
Yeah,
that's crucial.
Yeah, maybe I would even refine that. Maybe that there's technical, but there's a product person, and that's a different thing. And we're really big fans of the Stanford D School design cycle. And when someone comes in with a very analytical approach to developing product, and they've got their shit together, that goes a long way. I mean, you can have a lot of technical geniuses who, there's a whole. You can tell when something's designed by an engineer and it's not pretty.
Yeah.
And to make it painfully explicit, if you do not have someone who knows how to actually build the product on your team at the seed stage, and you haven't sold a company for at least $100 million before, you will not get funded. So just...
That's what we were after. That's what.
My point.
So because I'm assuming that the product is there, I'm always a bit more intrigued by the go-to-market strategy and how well do you really understand your user. I mean, how do you create joy in a user if you don't really know who they are? And you have to be really explicit about that. And you also have to be really smart about your marketing and your brand. How do you not overexpose your brand to the wrong people too quickly? How do you find that great burning core of initial users? Who are those people? And I'd much rather see, 100 or 1,000 really avid users than, 50,000 users who came through because you had a little write-up and they just all churned through the service and it's not working anymore. So it's, do you really know your customers? And then can you provide them with something that's actually durable, that's going to be habit forming, that it's going to be a part of their life in some way? And it's not just, I used it once and it was a cool novelty. Some people like those businesses, but I don't like things that they don't seem to have real, ultimate meaning to people in how they're going to experience whatever it is.
Wow. So I have to ask this question just because it's going to be really funny. Carter? Carter is a really interesting sort of meandering angel investor. Would you tell us a little bit about your vibrator company?
It's related to music.
I swear to God, he's in a vibrator.
It is related to music. It's a line of vibrators called Oh My Bod, and they vibrate to music. And there's a club version that will vibrate to ambient music while you're out dancing. And we have another.
Wait a minute. Can you go back for a minute? While you're out dancing?
Yeah. Yeah, it picks up the ambient music and vibrates. It's, I guess I can use sex terms on this panel since you asked about it. It's an external clitoral stimulation vibe that slips into your panties, and it'll vibrate to the music while you're out raving.
All right.
What's the URL for that?
LegalEcstasy.com.
Yeah, there's a. Although that would be good.
I think there's a partnership.
I know.
Yeah.
Did you take samples?
I'm wearing one.
I have
smiling.
That little speaker.
Transducers work humor both ways.
I did not want to think about that.
So on that note, anybody got any questions? Now that we've taken it all the way down the hole, so to speak. Ooh, sorry. Any questions so far?
Who's going to come up with something that can be...
Can top that? I don't know. Should we stop
Might as
now?
well go home.
Panel's over.
How important is pedigree? Coming out of the Ivy League school, going straight into Google at 22, and just having that thank you.
The question was how important is pedigree, and citing, the kid that comes out at 22 from Stanford, let's just say, goes to Google and just has that history. Doesn't necessarily have an independent success, but has that technical pedigree. How important is that?
I was gonna say it's nice. It's not a requirement. So so for example, my most recently announced deal was Storenvy. Storenvy founder John Crawford. He's from the Midwest, and he did go to college, but not anywhere that most people in the Valley went to.
What's wrong with the Midwest?
Nothing is wrong with it.
Yeah.
Hey, I got a whole lot of Kansas
Easy.
people. But my point is, he's not like East Coast, Ivy League. He didn't go to Stanford. He didn't check one of those boxes. And my most recent angel investment is a company called Supply Hog. CEO, Nathan Derrick. He's from Chattanooga, Tennessee. Gonna go back there. Didn't go to college. Rebuilt cars to get through high school. So it's absolutely not required.
So that goes back to the passionate founder.
Yeah. You have to know what you're doing.
Correct.
And I don't believe going to college is not necessarily the check that says, hey, I'm smart because I went to this college. But it helps. If someone went to Stanford, I don't have to work as hard to know that, they're probably not an idiot completely,
Yeah, there's a caveat to that a little
Yeah.
bit, which is that, and so pedigree matters a little bit, and part of it is the network, honestly. I was a cryptographer for many years, and I was at a cryptography startup, and we would.
That's much sexy.
Yeah, well, not so sexy, but we had a really tight relationship with a professor at a local, well-known university, who would send us the best PhD students that had come out of his little herd every year. And we never once hired one of them, and the best cryptographers that we had were a guy who didn't go to college, a guy who dropped out of high school. It's not that going to Stanford is a problem. It's helpful, and it actually there is some value there. But the thing that I care more about is a self-learner, and someone who's a self-learner who it doesn't matter where they went and what the official curriculum was. They studied something of their own interest and got to be experts at it. That matters a lot more than where you went to school for me.
I lived up here for a few years, brief, and then I moved to Los Angeles. And I think you have to watch it a little bit. I think I'm the only person on the panel not living in the Bay Area. But there is a little bit of Bay Area, if you didn't go to Cal or Stanford, especially Stanford, it's or maybe we'll give you MIT and Harvard, maybe.
MIT.
Yeah, but it is so, you get a little bit into that, whipped up into that kind of frenzy here in the Bay Area that just doesn't exist other places. So I think you have to remove yourself from kind of everybody here went to Stanford, everybody here went to MIT. It doesn't exist like that outside of Silicon Valley, and I know this is kind of where it all happens for a lot of things, but I wouldn't get caught up into it, I'll put it that way.
By the way, I'm from Los Angeles and did not go to Stanford.
It's good.
So
Let's talk.
What about you?
Hey, I was curious to hear a little more. It seems like Larry has an idea that's a little bit at odds with something you said, Carter. Not to disagree with either of you, but wanting more information about.
Let's fight.
Yeah, go for it. About you saying, not everyone's like me, right? Go and seek out your personas or your target market that's expansive to a certain extent. And then Larry saying, find your burning core of devotees. And me looking at some marketing research that says, it's kind of the 80-20 or the 90-10 of super fans, people who are spending the most money in the space. I'm just wondering if you guys...
Yeah, I don't actually think there's... I hate to not have a fight, but I don't actually think there's a contradiction there. I think what Larry's talking about is strategy for... if that set of burning fans is all that you'll ever have, and maybe Larry can correct me and I don't want to put words in your mouth, but if that burning set is all you're ever going to have, because that's the totality of the market, that's a problem. But if the market can be a lot bigger, you first cultivate that burning set of fans, because they're going to bleed into the rest of that market and kind of do your own work for you.
Well said. Yeah, I mean, they should be a proxy for the broader market.
Okay, thank you.
I've got kind of a very specific question that's not specifically about investment so much, but there's this thing in the music technology space with B2B services, where the second B is sometimes a company, a business, and a lot of times it's an artist. And there's a very weird disconnect between the needs of an independent artist and a more advanced business. And I'm just curious if any of you have experience or feedback about how you sort of, like if you want to be the ubiquitous service in the music industry for a business service, how do you sort of address both the independent artist and the business and work? I mean, do those have to be two separate companies, one that serves the indie artist and one that serves the business, or?
May I? This way. Okay, so I built a company that had that dilemma, and the answer is you can't serve both. So I think when you're dealing with an enterprise client like Kanye West or Keith Urban or fill in the blank, they have number one, they have a different set of needs. Number two, they are playing at a different level financially, and when you look at the totality of their online enterprise businesses compared to what they get paid to do one show, it's a drop in the bucket, right? So, and then on the other end, you have the independent artist who has a different set of needs. They have a different financial situation, and they have a different market they serve. So their problem is obscurity, right? Where Kanye West's problem is actually the opposite. Kanye's got too much to do and not enough time.
Traffic control.
Right. So I think that you. And quite frankly, if I as an investor, I look for companies that are in the enterprise side. So, Reverb Nation's a great service. I wouldn't want to be an investor in Reverb Nation. I would want to be an investor in someone who's serving that sort of top 2% of the market, because there's a lot of money to be made there.
Yeah, I mean, as an example with Isolation Network, which is Ingrooves, if you guys know that business, we actually encounter this exact issue, right? So, second largest shareholder of Ingrooves, Isolation Network, is Universal Music. Why? Because we are the entire digital supply chain for Universal Music. That is a very different proposition and a very different service level in what they need. They don't need some of the stuff. They need a lot more of certain things, and they don't need other things than the Ingrooves Fontana side, which is serving independent labels. And even slice it further, we have In Residence, which is serving independent artists who don't want to be with the label. And we've basically put all three, they all use a shared technology platform. There's shared services there, but the same guy can't serve all three of those because they are three very distinct markets, even from the independent artists to the independent label.
You're saying you're using the same technology for all three markets?
Yes, but there's different needs for it, right? You build a platform, and basically you build a platform for, that's for Universal. It's the enterprise, and that's going to be able to serve everything anybody needs from a technology point of view. But now the independent artist or the independent label needs services on top of that Universal may not need, or they may need a bell and whistle here and there, or they may need our business development to go cut a deal with services where Universal can cut a deal separate. So it's more on that service layer on top of it that you need to really be on it. By the way, best pants here today by far.
So I'll just to mix it up, I'll just disagree completely for two reasons.
Let's arm wrestle.
First is that we're talking about the future, not the present, and it's all about disruption. So if you can really articulate why you can serve the big bands of the future, and you can grow with them, that's very powerful. Obviously, the really big bands are in their own league, but then again, you also have an industry that is just in complete transition, and I think that artists are going to be getting paid in very different ways than they're getting paid now. So that's something that everybody loves, which is more money. And if you can figure out how to help them get paid and solve the broader need, particularly of the emerging artist, I think there's something very interesting there. But it's really about your plan and how you're going to execute on it, or what you've actually accomplished. I don't necessarily think it's generic. Yes, at later stages, do you need to have focus? Sure, but things are definitely changing very rapidly out there.
Larry, I'm wondering if maybe you can extend kind of that conversation a little bit more, because back in the East Coast, there have been some prominent VCs who have kind of come out and said that they won't invest in music tech, like Fred Wilson and David Packman. And so what do you see that's changing, and where are the opportunities going to be?
I mean, we actually were talking about this general subject, of music licensing, which I think is really what's driving those comments, from Fred and David. But look, if you're licensing your music and you're going to have to spend your money up front in order to even be in business, and you don't have real certainty longer term of what your licensing is going to look like, that is fundamentally not venture fundable. And that's a bit of the catch-22 that's going on in the music business today with startups who actually want to sell music in some form. And I think there's definitely some shifts from the label side, realizing that you need to have an ecosystem of innovation in order to really compete and bring your wares to the market. But it's a slow move, and I don't think that it's kind of hit a point where there's really clarity in any sense from the big labels how this is all going to work. But I think there's a lot more desire to try to figure it out. I have a ton of different music deals because they've all either figured out how to not do licensing and solve different parts of the ecosystem, or they've figured out how to do very creative licensing. Pandora is using statutory licensing, so it doesn't have to do those individual deals. Lyric Find is actually aggregating licenses from thousands of publishers around the lyric space and then empowering startups. So there's just huge friction in between there, and they're solving that kind of problem. And then there's just huge other pieces of the ecosystem around. I mean, there's gear, there's education, all sorts of exciting things in production. And then there's just a lot of other community. And look at all the major companies. Look at Apple and Google and Amazon. They're all using music essentially as a loss leader, as a part of their other services. Why shouldn't it ultimately be a profit center, not a loss leader? And if the industry would grow the pie and think about growing the pie, I think a lot of really good things would happen. But in the meantime, a lot of exciting companies that I think are figuring out the issue.
Get your pens ready. So I'm going to ask each of you guys, where's the white space in the space? So what are those problems that you think need to be solved? Give a couple of specific areas of things that if it walked in the door, you'd go, holy shit, I got to jump on that right now.
That's not really my job. I'm not trying to invent what other people are going to invent in front of them. I mean, I have ideas of things that I think are exciting, and then somebody shows up. I mean, I had that happen to me at Meetum. There's something I've really been thinking about, and an entrepreneur showed up and he pitched it to me, and it's really intriguing, and I'm taking that conversation to the next level. But it's really about what it is you want to manifest, what you think it's going to be. And if it sounds like it's the same thing that everybody else is doing, it's not that interesting. But I think the whole education side is really interesting. I mean, the impact of I think music gear can be really interesting. I have a PA and a studio and all that, and there's just so much useless gear and signal flow. It's ridiculous. I think I'd love to solve the whole thing with a button. And there should be some great ways to do that. I mean, why do all mixes live sound like crap? Why is the bass player mixing, from behind the PA? A lot of things don't make sense. People buy a lot of gear, And Gear can be a really good business, and it's a business that hasn't really changed very much in a long time. But, an iPad can actually do a lot of things better than a lot of the stuff that we all probably own.
Anybody else want to take a whack at white space? Come on, you want to do it.
So
I know.
I'm saying, if Larry can't do it, I mean. The only thing I would say, so I tend to not focus on like specifically inside music, what's the disruption? And I'm not the music expert to pick that out. I'm just supposed to pattern match when one of you guys figures it out. That's my job. So please hurry up. There's money to be made for all of us. So, but what I can tell you is some of the categories, where I think disruption is happening that more broadly. So, our team's been very interested in what's happening with context awareness and what does that mean as far as you've got this dense little package of sensors and radios in your pockets. What magic can you generate with what's going to come out of those sensors and radios? That'd be really interesting. I'm very interested in people having a personalized experience, whether that's recommendations or referrals, and that might be restaurants or music or whatever that is. And how do you make that actionable? Is there a transaction you can bundle in? Also very interested in persistent experience. So you're on your laptop, you're at some desktop at the office, you're using your phone, you're on your iPad, whatever it is. Do you have some persistent experience with persistent access to some information that's unique to you? Those are some areas that I think very disruptive things are happening. Car technology, things like that. Can you touch those with music? Absolutely. But I'm not going to tell you exactly how. What's your job?
How many of you guys in the room are doing curation ideas? Okay. How about persistent experience? I'm looking for your next investment. There's one. There's a persistent experience person. 2, 3. Okay. Other questions?
I have a funding question.
Go.
There's clearly
Hold on, we need you to have a mic.
Oh.
This is being recorded. You signed a waiver.
We're gonna sell this.
It's a bottom line funding question. Somebody knocks on your door and says, I need X amount of money, $1 million. And sometimes the question is, well, why do you need $1 million? What have you done so far to get to this point where you need $1 million? Have you done friends and family? Have you done angel round? Have you ponied up a little bit of cash? How much of your cash have you invested? How do you approach that conversation? Just the I need this much money
With an investor? Is that
correct?
Okay. Larry?
And what should the investor or what should the entrepreneur what should they have in their bag of tricks before they come up with a figure?
So I think there's a misperception around probably what we all do, and especially in venture capital, at the earlier stages, in that there's a view that it's a very long-term business, and we're investing in really long-term things. So yes, the average holding period of an investment is longer than the average marriage. I think it's 5-7 years. So you're really engaged with the companies for a long period of time. But what we're actually funding is the next 6 to 12 months. What is that focused plan that you're going to do? So I think the real answer to the question is, what are you going to do in the next year, and what do you need to accomplish it? And if that makes a lot of sense, that's where I think you have a chance of actually being funded, whatever that amount is.
Do people?
I have a question. Right behind you, sir.
Oh, sorry. You're next.
Hey there. So I work with a bunch of foundations and philanthropists that are funding, nonprofit organizations. It's a different type of space. I'm curious. I know, Christine, you mentioned you worked at Omeviar.
Yeah, I did the media strategy there.
Oh, cool, great. Yeah, I'm just curious about, for the rest of you, do you all ever fund sort of nonprofit type projects or projects that are social enterprises that are not intended to make a profit but are in some way serving the community or creativity or freedom of expression or policy advocacy for stuff that all of the other investees would benefit from?
Speaking for me, the answer is yes. And what I'm looking for, I tend to follow those investments for a period of time before I put money or time into them. In my case, I have 2. One is the Center for Entrepreneurship in Nashville, Tennessee, which is about building our ecosystem up, rising all the boats. and the other is the W.O. Smith School of Music, which educates children for 50 cents a lesson and fundamentally alters their life in a way that's miraculous. And so for me, it's all about what kind of impact it actually has to the end user, whoever that is.
I mean, most professional investors are going to tell you no, because there's a whole separate lesson on how venture capital works. But typically, it's no different than the Harvard endowment is going to go put money into a mutual fund. They're going to go put money into Benchmark or whatever to make a return. So it can't really go to nonprofits, which is different from an individual person being passionate about a particular category. So if you're talking to venture firms, maybe individual partners, but certainly not the firm.
Yeah, I just as the individual person, I can get excited about causes like that. I typically don't invest if the person isn't looking for a profit. Not because, in some cases, not because I'm trying to make a profit, but because my experience has been nonprofits are inefficient, and if the person is not thinking about how to make money, they're also not thinking about how to use money efficiently. And I don't like investing in inefficient things. So I've found businesses who maybe have a nonprofit component to them, or maybe a social good component to them, and they're doing something really good, but they're also trying to make money, and that to me matters because it means the right person is running the business, and it's less likely to just flop.
Well, and I was just going to call out, nonprofit is just a tax status, right? There's nothing about being a nonprofit that says you need to take charitable donations, right? It's just a tax status. And you demonstrate you do social good, you can be a nonprofit and not pay taxes. That's basically it. So like Common Sense Media, a great example, our initial grant to them was $4.5 million. We put that in, and they were on a very specific plan for becoming, self-sufficient, getting revenue from cable companies, getting revenue from the site, like things like that. So that's something else to think about. I think folks like Carter, they're going to respond to that.
Yeah, that's way better for me than, I'm just trying to do good, and I'm going to keep getting donations forever. That doesn't work for me.
Not as fun. So I'm on the board of the Jazz School, great organization. It's a nonprofit, and I'll do stuff like that personally, but no investor is going to do anything in their fund that isn't about generating returns. We're an asset class, and that's what we're here to do. There is that dispassionate side of it.
Can I go back to your question for a minute? Related to, pitching for money, and in full disclosure, I am an investor in this, but if you go to bestpitchdecks.com, that was built on a platform called popular.me in less than an hour by our CEO. Every great pitch deck over the last, so Facebook's first pitch deck is there, Next Big Sounds, Seed Camp, Foursquare. You want to look at how to pitch, there's a site with a bunch of decks that you should go look at.
Can I contradict you just for a minute? Not that that's not important, it is.
It is.
I actually think the first 2 to 5 minutes where you're speaking verbally without a deck are more important than your deck. If you can't hook me really quickly verbally, I don't give a shit about your deck, and I'll never see it. So you really need to get your pitch down really well in that first few minutes.
And I would agree with that. The other thing I'd say is if you have a great deck, it's not more than about 12 slides.
Yeah.
The appendix is your friend.
Yes.
Oh, but of course I prepared a detailed slide on that. Not everyone wants to see it though.
We gotta. He's had his hand up off and on for.
I just had a quick question. Typically, especially for you, Larry, what does it cost someone, in terms of what they have to give up to get an early stage investment?
I'd say a typical investment round ranges probably 20 to 40% dilution in general. If you looked across the industry, at the different ranges, and that frankly, tends to go for the different rounds, which is part of why it's really important to make a lot of progress, because you want to either prevent raising those rounds or make enough progress that you, have minimal capital to have that dilution.
So I'll jump in here too and add my 2 cents, which is this is a good plug for having good advisors. So whether that's legal counsel or someone else who's sort of on your side, not that everybody here is not kind of on your side, but as an entrepreneur, I think that's, very similar to the question I get often of how do I make sure I'm prepared, right? The next question is, how can I protect myself from losing my company too soon? So it's definitely a conversation to have early and often with whomever you can trust to have that discussion. But that's often why we start having conversations about maybe I should do some convertible notes and do sort of other things. I don't have to set a valuation right now, because if I haven't set a valuation right now, then I can put off sort of the inevitable giving away a large chunk of my company.
Let the grass grow a little bit.
Yeah, exactly. Like to his point, right? I mean, if there's more there, then you can drive a higher valuation and hopefully protect that. Now, I should obviously say the obvious point, which is at some point you will lose control. It's just a quick question of when and how, and when you're ready to do that. Some folks are so desperate for money at the time that they need it, and they've kind of got folks lined up to write the check that they're willing to take that at any cost. The problem is you can't ever get that back, right? So it's an important decision point.
Yeah, and the one thing I would say about that is there's a big difference between money and smart money.
Absolutely.
So be very careful about who your investors are, particularly early.
Yeah, I agree.
Because they will derail you faster than you can say derail.
And there's definitely out there.
Tons of it.
I agree.
We got one back there.
So typically, when you guys come in, do you normally do like a debt round or equity? What do you normally do at that stage? Specifically, where?
I always do equity rounds, just a priced, clean terms equity round. And I don't like notes in particular because because they're not priced. I feel like we can actually be adverse to the entrepreneur. I want to get involved and work on building value, and then work on finding the later partner, not have somebody sitting across the table and saying, gee, you want to take this other investor because they have a lower price, and I really want them because I think they're a better partner. And those are just difficult conversations to have. But if you're going to take a note, and that's very typical, seed rounds to just be a note with a cap, which is frankly the same thing, as equity, depending on how the cap is priced and what the terms of conversion are when it actually comes due, upon maturity. So, and maturity comes up, pretty quickly. So thinking through what that really means, matters a lot, because suddenly you end up with a bunch of angel investors, owning the equity in your business, and then, that's where you are.
I just want to emphasize something that Larry mentioned at the beginning here, which was an alignment of interest. I think you see a lot of times where owner-founders, whatever you want to call them, the management team has been taught to basically drive the hardest deal or specific issues here and there. The reality is the goal of the deal, no matter what round it is to be fair, obviously, but to also have alignment of interest at your board level, your investor level, and your management team. It sounds so obvious, but there's so many structures that we see coming in on a D round or whatever later, where you look at what happened on the A, B, and C, and you're like, what happened here? Of course, it's a disaster for you. As a management team, you should not worry about picking up that last penny off the table and driving the hardest bargain. You should find the investors that are like-minded and cut a deal where your incentives are somewhat aligned. That is going to make life so much easier.
Well, to Larry's point earlier, it's like a marriage, right?
Yeah,
and that's the counseling
absolutely.
we often give, right? You need to find the right partner, and you need to make sure that you are going in the same direction, in the same boat, because that breaks down really quickly. And honestly, once they've invested in your company, like there's no real out, right? I mean, it's you're kind of with them, so you want to spend time picking those folks well.
Yeah, I think having great counsel is actually really important. I've been a part of multiple deals where the first thing was actually redoing all the corporate documents because they were messed up. And I know doesn't seem that interesting to form your company versus building your product, but when it's formed incorrectly, it's just amazing how much time you spend, dealing with it. And then the other thing, it hurts your ability to actually raise capital because things fall apart in legal due diligence, which is a pretty real, portion of the whole process.
Paying for that plug.
Yeah.
Well, and on exit, I mean, when you think about when you're actually in a transaction and they go, we're missing fill in the blank, and you're like, scrambling to find that piece of the package that's holding up the deal. It's a nightmare.
Yeah, it's true. I mean, I actually had several folks come back from pitching VCs and angels, et cetera, and they say, well, it was really nice when they asked the question about, who we've been working with or how we've been doing it. They can just check the box, like, oh, okay, good, you've got, one of the 5 folks in Silicon Valley that does this regularly, so we don't even have to think that that's going to be a problem. Versus, oh, I had my, uncle's brother-in-law helping me, and they live in, Arkansas, and it should be fine, right? Then all their alarm bells go off, and they think, well, probably that house is not in order, so we need to solve that. So it does help.
Not only is that house not in order, it'll be a nightmare to do the deal with. I mean, that is a disaster from our point of view. Whenever like the guy from Arkansas, someone's uncle, is representing the other side. Forget that they formed the company, that's a disaster.
If they're still there,
but
it's
if they're
even worse,
still there on the other side,
Yeah.
it's even worse because you will spend days, hours, weeks negotiating things that don't make any sense.
It's true.
And to be honest, we'll walk from that. It's not, life's too short.
And you can find lawyers in the valley who will take equity or kind of work with you as a startup. So it's not impossible to get off of the Arkansas lawyer problem.
And you can find that. You can find that anywhere. You can find a good lawyer in any market who's smart and will take some equity in exchange.
Agreed.
Well, we got another one right here. Go.
How important is it to you? How important is it how much money I've raised before? So if I come with a great idea, some cool product that's been built, but basically bootstrapped that myself, put in some 50 grand on myself, had 2 rockstar engineers to build that, and it works, and I would be asking for $1 million, would you say, well, first do some angel rounds and get some $200,000 here and there and then come back, or would you not say that's a problem? Do you not? How important is that aspect of how I went through that normal step of raising money here and there, that normal way before I actually address VCs at some point? Are shortcuts okay to you?
Yeah, it's irrelevant. I mean, basically, people want to know how much progress have you made with the business, and progress with the business means, how is the product? Have you got customers yet? How many? If so, do you have revenue yet? How much? If so, those are the things we care about, not what funding strategy you used to get there. Unless you did something bad with the funding strategy, that makes it messy. But certainly the total dollars invested, if it's too little, never going to be an issue. In fact, we're very excited that you're capital efficient. If you have too much, that might present an issue because then the valuations might not make sense. So that could be problematic. But never, too little is never a problem.
Talk a little about that. Talk about an overvaluation and the potential for problems later.
Yeah, so probably every person here has not invested in a deal because of valuation issues. So let's say I looked at a company and I might really like the business, but the valuation they had at their last time of investment, I might think that was actually more than it's worth today. I might think that maybe today it's worth the same as it was then, because the last set of investors overpriced what it was worth, or maybe the market changed since then. And so it's a difficult conversation to have, to go to the entrepreneur and say, I'd love to give you a term sheet, but I don't know that you'll take it. Because if I give you a term sheet, the valuation is going to be here, and your last valuation was here or here. So you're going to have issues with, if your investors, there's something called anti-dilution, where your investors get more shares to make up for the fact that you lowered the price. So their anti-dilution is your extra dilution. There's that. There's, sometimes other people are like, no, just keep going, we'll find someone else, that's not the real price. So a lot of those deals I've had to walk away from. I don't have a valuation agreement. And often that comes because someone raised a lot of money they didn't need, and so they increased the valuation accordingly so that they wouldn't have to sell as much of the company. And so that range of 20 to 40% is, that's the right range. And often there's some correlate when someone says, how much money do you need to tell the next story to get to the next phase? You want to have an honest answer, and don't just raise some big amount of money that then influences your valuation and then screws you up next time. It's all sort of, get a smart advisor, because all these things are closely related.
Yeah. Got about 2 minutes. Okay, so the Shark Tank, how has that distorted how people approach you? Because I was just approached last week to get casted for a new show on a major network for my brother and my company, and I turned it down because I feel like the Shark Tank is a total gimmick. and I'm just curious as to your opinion on it.
I love the show. I mean, I was watching it. We watched it last night.
That's my favorite show.
It's our job, faster and meaner.
Or not.
But I think what I think it really shows, which is key, is just how little time you really have to express what you do, and get that product in front of them. And when things make sense, they really react to it. I think that there's a bit of an American Idol aspect to it. I think the fact that they're on Shark Tank and they're getting the 15 or 20 million viewers is just naturally going to help anything they look at. And they're also incredibly cheap. I'd say by Valley standards, they're getting very good deals because of the dynamic that exists there. They're definitely ultra value players. But I think it's great. I love the show.
It's basically
What's
a
not
paid
to love?
promotion, right? And I've seen the contract that they give when they make you an offer, and you don't have to take it, even though you say yes on the show. You don't have to take money in exchange for appearing on the show. So I had one of my angel companies got invited to appear, and I was like, "Go, do it, do it! Are you kidding? I'm that big audience." But they're afraid they'll get
They take 5% regardless, though.
only if they don't necessarily. I've seen different contracts.
This contract for me was a little bit worse, and I didn't
Yeah.
feel right, so.
Yeah.
Well, bottom line is entrepreneurship is the new rock and roll. So inevitably, play the game. It's a game, and you have to decide, what lane you want to run in. And sometimes that works for people, and sometimes it doesn't. And that was the end button. Guys, thank you very much. Give a big round of applause to our very smart people. And have fun today. Make sure you tell Brian Zisk you love this panel.